Nasdaq steady right now, so we're up about 0.5% on the benchmark indices. We've lost a bit of ground from the top of the trading session, but in the last 15 minutes, things have been quiet. Happiest Minds is a stock you should also look at. It's up 2% today. The stock price has crossed the 1,000 rupee mark. This is after the board approved a fundraise of nearly 1,400 crore rupees over the weekend. This is over and above the 600 crore of cash that the company has. So it'd be interesting to find out what they plan to do with this, incremental 1,400 crore of fundraise. They do have aggressive growth plans. They want the company to be a $1 billion company in terms of revenues in the next 10 years. So perhaps there we could expect some M&A out of Happiest Minds. Another stock that we've been looking at over the last few days is Max Ventures. And look at the way the stock is rallying on very, very large volumes. This is the last, 1 month chart, and the big spot has only come through in the last 3 days. Last week, we had a chat with the management of Max Ventures, and at that time, they told us that the current residential real estate portfolio in the NCR region is about 2 million square feet, but they have development plans of up to 8 million square feet, 7 to 8, which means a 4x jump, and they're also in plans to further increase it to 10 million. So they've got some aggressive plans, and the street is latched on to that. But we're out of time on, trading hour. But as we wrap up this show, we leave you with some important market opinion that we got from Gautam Trivedi of Nepean Capital.
I think downside is certainly left in this market. I tell you where I'm coming from. Again, in spite of all the stuff that we've seen, and of course, you've seen some degree of FIs coming back into the market, which was a positive briefly. Again, last month, they sold almost $1 billion. So will India end up decoupling? I don't think so. What we see is the other concern, of course, is in terms of valuation. And again, I've said this before, India has, of course, always been one of the most expensive markets among the emerging markets and always the most expensive Asian market. But now we're at 20.3 times calendar 23 PE, which is more than double that of China's. MSCI China is now at 9.3 times. We could certainly revisit that. I don't know about going below that, but certainly revisit that. And the reason I say that is because we've tested that once already. Now, let's keep a couple of other factors in mind. That, yes, the recession and the issues that are there in the West are not necessarily the same issues that we have back home in India. So let's get practical about that. The ability to support this market when that fall does come, and I hope it doesn't come, but assuming it does come, will be, I think, driven by how much more attractive other alternative investments are.